Good morning, everyone. Darius Dale here to present our macro minute for Thursday, March 24th, 2022. Starting with markets, we have stocks mixed this morning with US leading and Asia and Europe lagging. We have commodities mixed this morning. Crypto's up, dollar up, global bond yields up. Big news this morning. We have US President Joe Biden. He's attending a NATO emergency summit in Brussels today with all the heads of state of NATO represented there. The US and the European Union are rumored to be close to a deal aimed at slashing Europe's dependence on Russian energy. And as in addition to that, President Biden of the U.S. is preparing to announce additional sanctions on Russia after the Pentagon found Russia guilty of committing war crimes in Ukraine. That means that this sort of tit for tat in terms of sanctions and the longevity of all the sanctions and geopolitical unrest is likely to have a long tail to it, irrespective of sort of any success Russia may have in Ukraine in the coming weeks and months. NATO also plans to warn Vladimir Putin against using chemical and nuclear weapons in Ukraine. It's unclear to me if that's a smart strategy, given how unhinged Putin is. He may actually be motivated to use them if he feels like he's being backed into a corner. So obviously a hot, fluid situation. We got to continue to just watch the news play out. Obviously, if we head into World War III, all bets are off. Don't watch this program. Protect your families. Big movers, Bitcoin and Ethereum are up around 2% a piece this morning. You have continued back up in bond yields, nominal 10-year note yields in the German Bund, UK gilt, and US Treasury markets up another 7 to 9 basis points a piece. So the world is pricing in a structurally higher set of inflation expectations as a function of the bifurcation of the global economy, as a function of this geopolitical unrest, and ultimately the policy response that we're likely to see from a defense spending and energy infrastructure perspective. On the macro front, the preliminary March PMI data out of Asia and Europe contain traces of the final legs of the post-Omicron bounce in global growth, while also ushering in the sobering reality of a developing commodity supply shock-driven slowdown. The levels of the PMI data, generally in the mid to high 50s, continue to provide a floor under risk asset prices. That said, our grid model forecasts lead us to believe that that floor will start to give way as global growth transition to a below trend state in the second half of the year. So on the accelerating front, we got the preliminary PMI data. Australia's manufacturing, Australia's services, Japan's manufacturing, Japan services all ticked higher in the month of March. On the decelerating front, Europe obviously bearing the brunt of the energy supply crisis stemming from the Russia-Ukraine fallout. France manufacturing and services, Germany manufacturing and services, Eurozone manufacturing and services, and the UK manufacturing and services all slowing. Taking it to the chart here this morning. What I'm showing on the x-axis is the level of the PMI data, so the most recent reading, and on the y-axis we're showing the deviation from a trend perspective. So 6-month moving average minus the 12-month moving average. Obviously, if it's a positive value, it's trending higher. A negative value, it's trending lower. And what you see is that we're starting to trend lower in PMIs for a lot of these major economies, particularly in Europe and even in the U.S. on ISM headline basis. But what you can see is that, you draw a line kind of down around 55. A lot of the major economies in the world are still comfortably above, what is a kind of what considered to be a healthy level of activity from a PMI perspective. So once you start to see a lot more dots on this side of the pink line that I just drew, that's when you're going to start to get a little bit more concern and consternation about the U.S. and global economies priced in asset markets. So it's going to be a process of going from here to here. And so this is something we're going to be paying attention to over the next 3 to 6 months. With respect to today's probable range setups, S&P 500, that is still bearish, fams, minus 9.7% of downside, still hugging the upper bound of its probable range. You know what that means in leading indicators terms. WTI still neutral, vams, minus 21% of downside versus 11% of downside, 11% of upside in its probable range. Bloomberg Dollar Index still bullish from the perspective of volatility, just a momentum signal with the minus 0.5% downside versus 1.8% upside in its probable range. 10-year Treasury yield, bullish, fam, still minus 40 basis points of downside versus 6 basis points of upside in its probable range. Bitcoin still hugging the upper boundary of its probable range with 17 basis points or 17% of downside. That's still bearish, fams. But again, when you hug the upper boundary or lower boundary, the probable range tends to be a leading indicator for a phase transition in the volatility adjusted momentum signal. So we're keeping our eye on that closely. Same setup with Ethereum, minus 22% of downside, still hugging the upper boundary of its probable range. And then lastly, gold, neutral VAMs, -3% of downside versus 5% of upside. So with that, Darius Dale presenting our macro minute for Thursday, March 24th, 2022. Best of luck out there.